We'll see the price of Bitcoin possibly rising to 300,000 plus US dollars. Market cap would be already at 6 trillion US dollars. The clock is ticking. You only have a limited time left to get your account into position. The next Bitcoin halving is approaching closer and closer, and the clock is ticking. The good news is that this could be your chance to earn a lot of money with cryptocurrencies and stocks. The bad news is that it could be your last chance to do so, plus you only have a limited time left to get your account into position. It is my belief as a trader and investor who has seen a lot of good times and bad times on the markets that the next 2.5 years will be a defining period and maybe even an opportunity of a lifetime to be on the winning side. But let's start at the beginning and let me explain to you exactly what I'm expecting and why I'm expecting it. Before I do so, do me the favor of hitting the like button and subscribe to my channel so you never miss an important update again. Everything I am now going to show you here reflects, of course, only my own opinion and is not meant to be understood as investment advice. You can take me as an inspiration for sure, but it's important that you base your investments on your own due diligence and not on the opinions of others, which of course also includes me. Yes, you read this right. I think that 2024 will mark the start of a super bull market where we will see the price of Bitcoin possibly rising to 300,000 plus US dollars and the S&P 500 to 6,000 plus points. This has been my main thesis since early October 2022 when I personally started to shift from holding cash back into the stock market and cryptocurrencies. You can follow my journey of doing so, by the way, by subscribing to our Academy Telegram group where I post updates on the markets and my personal trades several times a week. You will find a link in the description and in the pinned comment of this video. Now, you might ask yourself if Dirk is crazy, because at the moment everybody is talking about inflation, further rising interest rates and a recession that is supposed to come. For sure, this should lead to falling prices and so-called risk on assets, right? Well, no, because this is not how the markets work. The stock markets and to a certain extent also the crypto markets do not actually trade what is happening right now, but they trade what will happen in about 8 to 12 months down the road to the economy. The very popular phrase buy the rumor, sell the fact actually stems from this, because once a fact is published and everybody knows about it, usually it also is immediately priced into the markets. An example for this. End of May 2023, news broke out that the German economy had officially entered a recession, with the economy shrinking 3 months in a row. 3.5 weeks after this news was released, the German stock market, however, made a new record high at 16,332 points, a plus of nearly 18% since the end of 2022. Not the performance you would normally expect in an environment of recession, right? Alright, now that we have understood that the markets are usually displaying what investors are expecting in the economic future, the question is, what is the economy going to do in the next years? Let's have a look. Inflation was for sure one of the main economic reasons that we saw such a bad 2022 for stocks and crypto. With US inflation peaking at over 9%, I think it's safe to say that the rising costs for groceries, rent and transport have also left a strain on your pocket. What item you are purchasing on a regular basis has increased a lot in price. Leave a comment how much it cost before and how expensive it is now. However, from an investor's perspective, if we look at periods of high inflation over the course of the last 90 years, we can see that every time inflation started coming down, this almost always also marked the bottom of the stock market. So once we saw that happening in September 2022, I said, well, this should be it now. We should have seen the worst and maybe it is time now to start moving money into stocks and cryptocurrencies again. Now, just looking at inflation is of course something you should not solely rely on, because high inflation causes a series of economic problems and thus reactions by the Federal Reserve Bank, whose goal it is to always maintain price stability, which is defined by an inflation rate of 2% per year. One of the actually surprisingly few methods the Fed has to tackle high inflation are the interest rates. In general, high interest rates will slow down an economy because companies and citizens tend to borrow less money. Less money borrowed means less goods produced and consumed, which then, very generally speaking, leads to a slowdown of the economy and then stabilizing or even falling interest rates. For risk-on assets such as stocks and cryptocurrencies, high interest rates are usually not good, because investors tend to rather go for the safe 5% they might get from the bank than the risky 8 to 12% the stock markets return on average per year. After seeing the Fed raising interest rates 10 times in a row to now 5.25%, we have now reached a level where interest rates are actually higher than the current inflation rate. I like to call this the terminal rate, because if we look at what happened in the past once the Fed stopped raising interest rates, we saw that it kept a plateau for anything between 4 and 17 months until interest rates then started coming down again. On average, this plateau phase lasted around 9 months. Now, let's pretend that the Fed is going to raise interest rates 2 more times this year. By the looks of it, maybe in July and in September to then 5.75%. If we count the 9 months into the future from September 2023, we land in June 2024. Now, what else happens around that time? Can you guess? Correct. Slightly before that, probably by end of April 2024, the next Bitcoin halving will happen, which will reduce the reward for finding a new block on the Bitcoin blockchain from 6.25 to then 3.125 Bitcoin. In the past, these halvings were always a very good time to invest in Bitcoin, as they initiated new bull runs with new all-time highs for the crypto market. Now, if falling interest rates will turbocharge the stock markets and the Bitcoin halving will turbocharge the crypto markets, then we have something that I like to call the chance for a super bull market, which can lead us to unknown heights in stocks and crypto. $300,000 in Bitcoin would be possible in my opinion, and 6,000 plus points in the S&P 500. And with these price targets, I'm actually more on the conservative side, as other analysts predict, for example, that Bitcoin might rise to anything between 500,000 and $1 million. Do you remember that in the beginning of this video I said that catching this super bull market might actually be your last chance of earning a lot of money in a rather short time frame with Bitcoin and Co? The reason for that is the market capitalization of Bitcoin. With prices currently sitting at $30,600, Bitcoin has a market cap of roughly $600 billion. At $300,000 for one Bitcoin, this market cap would be already at $6 trillion, or half the market cap of gold. The higher Bitcoin rises, the more it will need to become comparable to the asset class that it is overtaken in market cap. And rising from a market cap of $1 million to $10 million is for sure easier than going from $6 trillion to $44 trillion, the market cap of the US real estate market. So, despite probably still being a very good investment even after 2025, Bitcoin might stop having these crazy bull phases where you can double and triple your money within just a couple of weeks. So, let's see how it plays out. If you liked this video today, please leave us a like and subscribe to the channel. I'm going to see you again very soon. Until then, happy investing.